If I talk about a fair value gap, most of the time when you hear me mention fair value gap, a new student that's never really spent the last 2 weeks with me, they'll think, okay, well, he thinks it's a buy because right now we're above it. That doesn't mean what I'm saying that at all. I'm saying that that's why we're watching that next. And if it can go through that, I may be bearish. I'm building the idea that I'm thinking the market's likely to go lower longer term. And I'm going to watch that fair value gap that would be below price. What would that be indicative of? I want to see it lose ground. I don't want to see it respected at all. Someone is looking at these things and saying, okay, what is he taking my attention to for? Because he's looking at this fair value gap, but he's also talking about how it could go down to a specific level. So it would seem confusing to a new trader or new student or new observer, but it's not to someone that's been watching me. If you've been in the live sessions also on YouTube, you can see how I talk about how I want to see it go through this fair value gap and then come back down into it and act as what? Support if I'm bullish. I want to see certain things unfold. That is narrative. I know enough to know that the average person doesn't have the mental faculties to do this, let alone be doing it quickly and successfully, regardless of what medium or approach to trading. Even mine, you want a routine on how to go in and do those things. That's exactly what I'm teaching you this year. A day in and day out, this is what we're looking for. This is what it looks like. This is how it repeats. And we aren't afraid of signals drying up and not working anymore. I tried the optimal trade entry and I get stopped out. How do you know which one's the optimal trade entry? Well, what are you doing wrong? Looking through the looking glass, you're looking for entries only. You have no context as to what you're doing. There's no narrative being applied to the chart. You haven't even consulted the higher time frame. So is it surprising why you're looking at something on the smallest degree of importance, which is the entry? I've stated this so many times that it's almost like you guys don't want to believe me when I'm being honest. Entry patterns are numerous. There's so many entry techniques to get you into the moves, but there's only one side of the narrative that's going to develop in price. That's it. You're not going to change that. The buying, selling, and pressure doesn't change it. The narrative is going to unfold, and that's just the way it is. And if you're not able to get on side with that, that means get in alignment, get in sync with it. Any entry techniques, I can give you the best ones I have. What makes this market most likely to go higher, and where the hell is it going? Just because you think it's going up, where's it going to? Because if you don't know that, you're going to overstay your welcome or exit far too soon. And if you look at what I'm teaching and how I teach it, I'm teaching you when to time the market, when to build a model that is bullish, when the bearish model is expected, when the market's going to be in consolidation and try not to be expanding with your expanding, but entering with your trades, expecting the market to expand out of that range because it's most likely to do what? Consolidate ahead of a big report. So you're not gonna be guessing. Once you experience loss, one of the best things that could ever happen is for you to experience losing an account. What do you say? Yeah, that's the worst. That's the worst thing in your mind that could ever happen right now as a student, right? That's the worst thing. How could anybody say that's the best thing? Because you'll know what it feels like to have one moment where you didn't even see it coming, and then boom, you don't have anything in the account, at least not enough to take another trade. I think every trader needs to experience that because then you'll respect the risk. What happens if you do blow an account, but you don't respect the risk and you go out there and you just do the same thing with the second one? Here's what you're not observing. What you're seeing in that, but ignoring, is that you are impulsive and a gambler. And that means you have to do some work. You have to correct that. And it's not easy because you are the person that's driving that. And you're doing it recklessly because you need an outside of you confirmation. That's why you're doing it. You're trying to do something Olympic sized, over leveraging an account, trying to get some kind of big win so that way you can feel like you are formidable. You can make a lot of money. Look at this. This makes you a good trader. No, it doesn't. It does not make you a good trader. It makes you an impulsive gambler. And guess what? Sometimes impulsive gamblers go to casinos and make a lot of money. But impulsive gamblers don't go to casinos every day or every week or every month of the year and make lots of money. Professional gamblers are not impulsive gamblers. They're calculated money managers, and they're utilizing the cards as what? Their multiplier. They don't know what the next turn on that card is going to be. They don't know what hand's going to be given to them. They don't know. And they embrace that uncertainty, which is the equivalent of us doing what in trading? We don't know what that next candle is going to do. They could drop a bomb somewhere and boom, the market gaps completely outside what your chart's showing, especially some of you, what I was talking about today in the lecture this morning. You're so zoomed in and you had just a handful of candlesticks. Like it's only going to move 10 handles at most. Like you have to have some data on your chart. That's the reason why you're not holding your trades as long, because you have no visibility. You're too close to the forest or too close to the trees to see the forest. You have your nose on one tree, and the only thing you can see is that bark on that one tree. That's exactly what every YouTuber is doing. There isn't one YouTuber out there that I've seen that has enough data on their chart to make balanced decisions. You're looking at it too close. And when you do get a winner, I'm in your audience sometimes. And I'm thinking to myself, it would be rude of me to overtake and say, this is what's going to happen. But I have sometimes tossed out numbers that said, like here, like a gentle nudge, like here, look there, and then don't take your profits in the next 5 handles. It's scary. Like I had to overcome a lot just to get into trades in 1992. Like it was scary after my first trade, which I impulsively just jumped in because I had to just do something. I felt like I had to do it. And if I could be honest for a second, and I did that orange juice option, it was almost like that same feeling. Like it felt like it was an overwhelming, I have to do something, and almost like I didn't have any control over it. Like I literally was pushed subconsciously to make a dumb decision. And I know looking backwards at that moment, how it was one of the most reckless and just careless decisions I've ever done with money. Now, I can do that today, but admittedly, that was a dumb decision, which caused me to make a lot of tweaks and mess with stuff and blow accounts trying to make things happen when I didn't have any proof behind what it was I was trying to force as a trader when I first started. And for some, if you listen to me as a benchmark of 5 handles, you're starting from ground zero. So 5 handles is a huge win. But if you just right now, for instance, the folks that are in Africa, you are challenged financially right now. If you made $250 a week, just a week, that's life changing over there. But these 5 handles can make a major dent, even with what I spend a month. So I know that all of you that aren't making a lot of money right now, and you're making whatever your job pays, by conditioning yourself, looking for something that's realistic and practical, 5 handles as a beginning, I think is reasonable. It's easy, in my opinion, but it's also powerful because if you can develop the confidence to see this repeating a lot, and you're not going to be fearful of missing anything. Why? How can you get to the point of ICT never fearing missing a move? Because I see them coming at all angles all the time. There's a lot of them. The point is you have to find the ones that you like. That's not my market. I don't wake up and look at the S&P and say, oh shit, it moved 20 handles overnight. I wish I could have. No, I can find 20 handles in a day doing 5 handle runs, up, down, up, down. There's my 20 handles. I'm not worried about it. And you won't be worried about it, which is where you should be as a trader. You need to know what you're looking for, what you're going to accept as a trade that incurs risk, and be comfortable with that. And if it fails, you're not going to lose your mind about it. You're not going to be in a hurry to try to find something that really isn't in the chart. What you're trying to do is impose your will. You're looking through that looking glass in a losing position. You're in drawdown. You're going to manifest your next setup, even when it's not there. Why? Because you don't have a clue what you're doing. You don't know your model, because if you knew your model, you would sit still until it formed. But you have to predict the price. You have to. That's what every winning trader is trying to do. And that's where I live. That's my fast lane. I'm taking you in there doing that. But I also know, as your mentor, that you're going to have problems in the beginning. You're going to discover things about yourself that you are not going to like. And you're going to impulsively, because you're not disciplined, you're not going to have the impulse of a professional where it is, okay, I'm in a market environment right now that is not conducive for high probability. So I'm going to impulsively remove myself because my training tells me to do so, not run away in fear or not roll the dice and see what happens, which is predominantly what everybody does. That's the demo disease. Okay. Push the button and see what happens. Push the button and see what happens. In the beginning, you're going to be a train wreck when you discover what you have as character flaws. Nobody has ever started this industry, ever, ever. Never happened. It's never, ever happened. It's never happened where somebody walked out here, got it all right from day one, and never had hardships or had to wrestle with internal conflicts with what they are as a trader, what they're not as a trader. They don't have a person out there in the industry that's like that. Everybody comes in here and we are all baptized in the fire. And that is going to be pain. It's going to be loss. It's going to be frustration. And guess what, folks? Listen, friends and neighbors, that is absolutely part of this. And that's why I never make any sugarcoating about it. I want you to know that's coming because that way you're prepared to, number one, identify it when it does. And then you have to do certain things to wrestle it and subdue it because it will undo you. I don't go out there and say, go out there and try to go for 10 handles a day. That's unrealistic. I tell you to look for one 5 handle move. That's what you're looking for. In hindsight, by doing that every single day, you're conditioning your eye to see it. They're the two most important, visually pleasing, easy to find. Jump on a chart real quick, any time frame, your eye will go right to the relative equal highs, relative equal lows. And if there's a fair value gap in the middle of it, and you know there's likely to go up there, well, you can buy the fair value gap and ride it up to the relative equal highs. There's your model right there. It's done. I just gave it to you and it cost you nothing. Probably some of you never even thought about it. And you're like, now, oh man, I never thought about it like that. Yes, it's just like that. But when you don't go through old data and you just binge watch my videos and you're not pouring yourself in charts, spending time literally every single day looking through charts, studying how these other moves that you can't make money or lose money in. Well, your attention to detail, and the details are what I'm teaching you. These elements, these PD arrays. It doesn't matter which one I love. It doesn't matter which one I'm using today, next week, going forward for the rest of the year. It only matters which one that you like. Which one makes the most sense to you? The first one that you can see easily in the chart, and it might not be the fair value gap. To me, it's the easiest one to see and spot, but it might not be for you. You might see a breaker. It just makes perfect sense to you. And guess what that means? You're going to trade breakers. It doesn't mean it's inferior or superior to any other one.